Happy Friday, everybody. We hope you're having a good month. It's beautiful weather down here in the DC area. We're finally getting some really nice fall. So hopefully the same is true for you. Now, switching from nice weather to mixed signals and maybe a little bit of uncertainty here, certainly on the economic side. While we've talked before about the Fed did lower rates. And there is this sort of silly, in my opinion, prediction market about what the Fed will do next. Well, honestly, it doesn't really matter because when we're investors, we care about the long-term sustainability and growth of our portfolios, not what's happening every day or every other day or even every 6 to 12 months. So, Fed policy, when it really matters is if I'm a mortgage broker, I care where interest rates are. Right? If the Fed lowers their interest rate by 1%, that's a lot more people who can afford a house, right? But to me, as a long-term investor, not going to make a huge deal. So I know that there's a lot in the news about the Fed, and there's all of this back and forth about the administration and are they forcing the Fed to cut rates and all these things. But ultimately, that doesn't matter to investors. So what we need to be focused on are other things that are getting lost in the noise that are just as important. Think about all of the people who we are either deporting or we are scaring away from coming to work. Now, one of the things that happens a lot with politicians is they're so concerned about the short term, right? The short term high that they lose sight of the fact that we do not have a growing population without immigration. We cannot fill many jobs, particularly in industries like agriculture and construction, without immigration. And so while we haven't felt these effects yet, we are certainly going to, right? These are things that metastasize over time, and it takes years sometimes to ripple through the economy. And this is one of the reasons that where we sit, it's really important to have companies in your portfolio that have broadly geographically diversified customer bases. Because the US has head scratchingly, in my opinion, seen a market that continues to go up. Now, what this has mainly been due to is oh, well, it's not as bad as it could have been. Well, in my lifetime, that's not a great investment strategy, right? Over the last 20 plus years, oh, it's not as bad as it could have been is not what gets people to a comfortable retirement. And so we can't rely on the fact that between the hope that the Fed lowers interest rates and oh, the administration didn't do something as bad as they could have, will lead to continued growth in stock markets. So what we're looking for in your portfolios on the stock side are companies that have diversified geographical customer bases, that have the ability to get around some of the more punitive tariffs, and honestly aren't in the line of fire in some of these industries, particularly things like steel. Right? That's a tariff that's been on the entire time and has not really gone up or down. And if you're a company, if we're buying somebody that's importing steel, that's trouble because that hasn't moved at all. There's no uncertainty as to what's going on there. So what we're looking for are companies that can potentially get around. They can move their supply chains, a little bit more nimble supply chain. They are producing services as well as hard products. A lot harder to put a tariff on services. And so these are things we're doing on the stock side. On the bond side, it's going to depend. If you have a taxable account, we're looking for strong tax revenue backed municipal bonds, not taxable at the federal level, and in many cases, maybe not at the state level either. But these are what are called general obligation bonds, and they are backed by the full taxing authority of the municipality. That is nowhere near as risky as what are called straight revenue bonds, which are tied to, let's say, the building of a new stadium. Here in the DC area, DC Council has just passed a resolution letting the former Redskins, now Commanders, move to a stadium back in DC on the old RFK site. Well, how are they going to raise those billions of dollars? Well, they're going to issue bonds. Well, those bonds are going to be paid back based on the revenue generated by the stadium. That's much riskier than being able to use the tax base, especially in wealthy areas. So that's what we're looking for. And then if you have tax deferred accounts, what we're looking at there are either short-term stronger government bonds, right? Where is that yield curve the steepest? That's going to give us the best yield to price ratio there. And strong corporations. Again, corporations with a diverse customer base, because we're not sold on the fact that the US economy and the US markets are going to keep going up because, oh, it isn't as bad as it used to be. So if you have questions, if you want to talk through your own portfolio, please reach out to us. We'd be happy to do so. We know it's important during these times of uncertainty to really re-baseline yourself so that we're not just reacting every time a new piece of news comes down the pike, because we're all too inundated with that. And we should probably just turn off our phones and screens for a while and just take a break in nature. But I digress. So I hope everybody has a great weekend, and we look forward to hearing from you.